We've had huge moves on the policy side. Just walk me through your base case and the kind of work that you guys and the team are doing at the moment.
Yeah, absolutely. So I think, like you said, it's really hard to forecast reinfection rates and kind of how long this stay-at-home period lasts. I think what's a little bit easier, although still very difficult to forecast, is just what the contours of corporate earnings are going to look like. And here we think we're in for a tough year. I think this year we're going to see down earnings by about 30%. Which is consistent with a recessionary earnings decline. But that sets up the stage for a pretty strong recovery in 2021, assuming we see some resumption of business activity by the second half of this year. I think what's going to be interesting, though, is just thinking about where we are on the calendar. We start earnings this week. And what's really interesting to see right now, and probably not that surprising, is that estimate dispersion is at all-time highs. This is a measure of analyst uncertainty. So if you look at estimates, they're just all over the map. And, it kind of makes sense because you've had over 70 companies in the S&P 500 that have suspended guidance. So I think what will be very important this earnings season is not necessarily the numbers that companies give you on 2020 guidance, because my sense is that not that many companies will actually give you numbers, but really what they're saying about kind of scenarios, based on this period of time in social distancing, here's the impact to earnings, et cetera. Because I think that's the best way to think about this market is based on the length of this social distancing period in the U.S., you can reasonably come up with some kind of an earnings assumption and then, use that to drive your outlook on the market. But net, I think we're in for a really volatile earnings season in the next few weeks.